And the Shouting Dies by Thomas H. Gamak. The Outlook, August 8, 1928. Largely because of the fact that few of the victims remain in the vicinity of Wall Street to show their wounds, there is little that is tragic about the aftermath of even a tremendous landslide in the stock market. 1 week sees noise, excitement, confusion. The next, serenity, dullness, boredom. When an advance is in full swing, every chair in the customers' rooms are filled, and the standees are packed almost as closely as they are in a New York subway car. 9 out of 10 of the occupants are gamblers, pure and simple, wanting something for nothing. About 50% of the conversation consists of postmortems. "I had a good tip on General Motors yesterday. If I had taken it, I would have made 10 points. I was wondering whether to buy 100 or 200 shares of General Electric, and of course I guessed wrong. I took 20 points out of radio last week. Its action on the tape was a sure sign that a move was underway." The rest of the conversation usually consists of the exchange of tips, conventionally prefixed by "I hear" or "they say." "I hear that the pool is going to put Postum through 150 before the end of the week. They say that steel is a buy under 140. But the conversations account for only a small proportion of the noise. Telephones ring steadily. Telegraph instruments clatter orders from San Francisco or Chicago. Instructions are shouted to the clerks. The tickers run at top speed. Occasionally, the cry will start, "There goes Atchison," or "Watch the shorts get squeezed in famous players." The business is too much for the machinery of the stock exchange. The ticker is recording transactions that occurred 30 or 40 minutes before. Customers do not know whether orders were executed, and if they were, at what price. The floor of the stock exchange is nervous with activity. Brokers have more orders to execute than they can handle without terrific strain. The public is in the market. Suddenly, prices rush downward. They settle at new levels, and all is peace. Only 4 chairs in one customer's room are filled. 1 occupant is asleep. The others are reading newspapers, glancing only occasionally at the board where transactions are recorded. The boys posting quotations are slow and inaccurate, but no one cares. If a stock goes up a point this morning, it seems sure that it will decline a point in the afternoon. The tickers and the telegraph instruments are heard only spasmodically. No one says, "I hear," or "they say." No one calls out, "There goes Kennecott." Nothing seems to be going anywhere. The victims find that their wounds heal fairly quickly. If one of them faces the fact that speculation has reduced his capital from $75,000 to $50,000, he grows accustomed soon to the reduction in the value of his property. He realizes in a short time, moreover, that he missed a great deal in the days when his greatest happiness was to look over the stock tables and see a +3 after the name of an issue which he was playing for a rise. He enjoys his newspaper on the train home, instead of covering the backs of many envelopes with calculations of the amounts he has won or lost during the day or week, or how much better off he would have been if he had bought instead of sold, or vice versa. He wakes up at 5:30, and instead of fretting over what the market will do, he turns over happily and goes back to sleep. Brokers on the floor of the exchange spend pleasanter if less profitable days. The stock exchange is very much of a club, but such frantic markets as those this spring leave no time for casual conversation around one of the trading posts. Incidentally, the brand of stories intended primarily for smoking room consumption should improve. Perhaps half of the tales of Pat and Mike, or the Englishman, the Scotchman, and the Irishman that filter through New York City start from the floor of the exchange. In view of the present apathy in the stock market, the trading of stories should be rapidly on the increase. If they are at all compassionate, some of the advisors who persuaded their friends to buy stocks which promptly dropped 20 points are even more unhappy than the victims themselves. It is not particularly pleasant to realize that a friend had to sell his house in the country because you told him to buy General Electric at 175. For some such reason as these, the month following a collapse in prices will see some friends avoiding each other, in fear of mutual embarrassment. But the clipped speculator soon forgets such unfortunate incidents, and the day may not be far away when he will forget to look at the financial news at all. A young insurance salesman is one of those who played the market heavily during this spring. He talked nothing but stocks and offered his friends tips on at least 5 stocks a day. The declines in his favorites following the raising of the Federal Reserve rediscount rates practically wiped him out. For at least 6 weeks, he didn't vouchsafe any financial advice. One day, though, he came into this office, obviously the bearer of news he considered important. "I just got a straight tip," he said. "It came right from the inside. Galena Gal is sure to win the first race at Empire City this afternoon. That horse has not lost a race yet." The end of a Wall Street boom means that many of the employees have a chance to see their families again. When 4 or 5 million shares of stocks are changing hands daily, as they were this spring, the strain of routine work becomes so terrific that it is necessary for the clerks to work almost every waking hour of the day and during part of the time they need for sleep. Returning to their homes means using up time that cannot be wasted, so many of them have to sleep in downtown hotels or on cots in the halls of business buildings. It takes the constitution of a Bismarck or an Edison to work at such a pace, and not a few of the clerks simply collapsed. It was, in fact, the hospital lists reported by some of the commission houses that induced the stock exchange authorities to suspend trading on several Saturdays in order to prevent the pile of work from mounting too high. Front-page tales of the terrific stock market activity brings literally thousands of merchants of Wall Street from other sections of the country. When the commission houses are being deluged with orders, they can usually find something for these youngsters to do. But when business and commissions fall off, many of the newcomers are cast adrift.